Volatility is entering the crypto space and also the stock market. What do you need to know going forward? Is this just the start or is this just a dip? Stay tuned and let's run the numbers. Just a quick piece of housekeeping before we get into it. Many thanks to all the hundreds of people who registered to get the Profiting from CTKS Method structure course absolutely free. I'd like to thank everybody for their comments, and I'm integrating those questions and comments actually into the course, so the course will be delayed. I'll keep you updated. Now, let's get into it. The crypto market is currently selling down. That's because Bitcoin is coming down. Because we know no alt can escape Bitcoin's gravity, no matter how strong the project is, with the exception of Tron, which tends to shine in the darkness. A very bizarre project that one is to try to figure out the timing on. But we can see Pepe is in the lower bank and Aptos in the upper bank. And Tron is starting to diverge and invert, and this is important for us to realize. Tron makes its money from minting stablecoins, apart from other things. So this is a reason that Tron tends to come up when the darkness hits the crypto market. And look at this, when Bitcoin came down, look at that dip. When Bitcoin recovered, Bitcoin came down, Bitcoin recovered. What you're seeing underneath all of this is Bitcoin, literally. This is why, if you don't know what's happening inside Bitcoin's market structure, you're in a lot of trouble. For example, you might be an investor or a trader in Ethereum. Ethereum gains its power from Bitcoin. What about Binance Coin? Same deal. What about Solana? Same deal. There's a little bit of a nuance to this. It's basically Bitcoin structural levels and crypto total market cap structural levels as well. They play out inside and onto every single price chart, and also the internal structure of what you're trading and investing in. The important thing to realize, when you've got a top project, they cannot escape Bitcoin's gravitational pull. If Bitcoin is coming down, you can bet your bottom dollar that that particular crypto project is also coming down too. I mentioned in yesterday's video that there was weakness emerging inside the markets, and I said it's important for us to just be realistic about how the markets work. Being overly positive or overly negative, both scenarios are not so good. Just being realistic is the key. Many people think that Bitcoin's price action is just really random. After all, it looks pretty random, but it's not random at all. Every single price chart that you will ever see or watch is directed from a structural perspective. For example, Bitcoin obeying these ups and down levels, it's all about structure. So when we pop on the structural indicator, what we're actually seeing is what levels of structural support actually existed when Bitcoin was up here, just a little bit north of 63,000. We had several levels of structural support below, and they managed to catch the sell-off. We've been just walloping right up and down inside this level, but weakness is starting to emerge. You can see that we're starting to lose structural support here. Now, what happens if we come down further? We just need to look at lower structural levels. And one of the things that we can see, just around that 61,400 mark and around 61,125, there's a bit of a negative CTKS gap here. And what that particularly means is the price can move down rather quickly. So the bearish case scenario is to move to 61,125. The bullish case scenario is to get above 62,800 and to challenge the 63,400 mark. As we go through this video, you need to stack probabilities as to which way you think it's going to go, and I'll talk a little bit more about that towards the end of the video. Total crypto market cap and Bitcoin hang out together, so it's very important to understand what's cooking inside total crypto market cap's structural levels. Now let's just pop on the indicator so that we can see where the true institutional resistance and support levels are. we can see that we've bypassed a level of structural support. That's opening up a negative CTKS gap down to the $2.102 trillion mark. This actually puts negative momentum inside the crypto market at this current time. If we were bullish, we would need a movement above 2.125 trillion to just come up to this next resistance level. But what we're seeing right now is we're potentially favoring a movement down because we have lost this area of structural support. From a bearish case scenario, coming down to that 2.102 trillion or even down to 2.082 trillion is something that could be well and truly on the cards. For a bullish perspective, we need to get above this structural resistance level here, just a little south of 2.126 trillion, and then we can come up and challenge the $2.148 trillion mark. For a bullish case on ETH, we need to bypass the 2440 level, and we could move up rather quickly, but there's so many sellers inhabiting the 2500 plus level, so that could be very, very hard for ETH to do. We've currently got a negative CTKS gap here down to 2281. So the odds are, if total doesn't hold and Bitcoin doesn't hold, we're going to see ETH sell off and sell off rather hard. As traders, we don't mind negative price action so long as we're aware of where the structure is or is not exhibiting itself inside the price chart. If we know how all the charts are intercorrelated and interconnected, we can make a lot of assumptions on where price could go to next. Solana has been under pressure ever since it did a structural fail around that 146.50 mark. It came down and it was supported by total crypto market cap and Bitcoin, structurally rebounding from resistance and also support. But you can see it's a little weak at the current time. So what do we assume for Solana? There are levels of structural support at that 141.90 and around the 141. Let's just zoom out here a little bit and see what's beneath that. We can see around the 140.20 mark, there is a degree of structural support there. So for a bearish case, we would consider the 140.20 mark to be quite important. If we don't maintain that particular level and we drop below it, that's very bearish. From the bullish perspective, anything above 146.50 is actually looking quite good. It's always important to have a three-dimensional perspective to everything we do. Just because there's market momentum on the negative side right now doesn't mean it won't turn around if it finds structural support. So that's the reason why you have to keep your eyes on these structural levels and see especially how total crypto market cap and Bitcoin are responding. When you're in a sell-off situation, and here we're just going to look at BNB or Binance Coin, knowing where the structural levels of resistance are and the structural levels of support are is incredibly important. When you get a sell down, it's going to sell down to a level of structural support. And if you've got a very heavy level of structural support, as we do in BNB, around that 549.40 mark, and there's also structural levels of support below, this is where we can expect price to just gravitate towards and flatline. They're very important to know their location and their strength. A little bit later on inside the video, I'll explain exactly why we're seeing negative price momentum develop across the entirety of the crypto space. Just keep in mind, a bearish case and a bullish case should be your go-to scenarios at all times. That is, you must be prepared if price comes down, and you need to know what you will do. Will you just minimize your loss, or will you add to your position? What will you do? And you are the only person on the entire planet who can answer that question. Nobody can answer it for you because we all have different reasons to do what we do. If you're also considering a bullish case, if price moves in the opposite direction to what you anticipate, you are ready. You can take advantage of it. That's why you need to at least hold two different scenarios, an up and a down. I've been mentioning for a while that the VIX is on a bit of a rampage upwards. When the VIX comes up, expect Bitcoin and the major indices, and of course all the stocks, to come down. Also, when the VIX spikes, it's very likely that gold will be hit as well as yields, as well as the DXY. This sounds really counterintuitive, but it's not at all. You have to understand that when fear enters the market, people just go nuts. Traders don't go nuts at all. We have a field day. We're looking for all of this volatility because we can ride it. In fact, we need volatility in order to be able to generate a return. But the thing to note, there are some times when the market is particularly throwing a lot of warning signals that you'll need to be careful. Using the knowledge from the masterclass, you can guard your capital, which is very, very important to do. A lot of people think that they must be fully invested at all times. Every professional knows that to be fully invested means you can't take advantage of any dip. Unfortunately, that doesn't optimize your portfolio. Another thing you might like to do is to look at the futures on the S&P 500, the Dow, the Russell, and the Nasdaq. You can see all the futures are following Bitcoin's directional gravitational pull, as behind the scenes, the VIX is spiking up. If you were on X/Twitter, you would have hopefully seen my post that I put out this morning, quite a few hours ago, and said beware of negative price momentum emerging into the market. This is purely because of the VIX. Typically, when the DXY comes down, we see crypto absolutely go up, but we're not seeing that at the current time. And typically, when the euro dollar goes up, we see crypto going up as well. We're not seeing that at the current time. What's actually occurring here is the VIX is overriding the DXY. Until the VIX starts to turn around, please be cautious of what you do. If you want to go all in and more, of course that's up to you, but I certainly wouldn't do it until you get a clear signal. If you've been doing the cheat sheet, you would have already realized that there was a big technical problem inside the S&P 500 in the past trading session. You might remember yesterday we were talking about this key level that the S&P 500 needed to maintain a bullish perspective on. We've broken down underneath that. And if you're keeping your eye on junk bonds, it's been throwing a negative signal. The VIX, unfortunately, is on the way up, and it seems fairly supported at the current time. We may get a spike up. If we do, the main market, indices as well as crypto are going to feel the heat. If you come back to where the Japanese carry trade or the Japanese curry trade did its indigestion on the market, this is where we dived in the crypto space. Bitcoin at that stage literally went from 68,000 down to 54,000 because of this spike. So please be aware, if we get another spike up, be prepared for incoming volatility. If we see a pushback from this VIX level, that is fantastic. That's what we want. But please keep your eye on the VIX. It's now incredibly important to prepare. One thing I've seen happen time and time again as the VIX spikes up, gold generally comes down, at least for a time. The precious yellow metal is just an awesome thing to have. I used to trade gold and I must admit I just love the stuff. Just bear in mind that if the VIX is spiking up all over the place, people are getting freaked out into and out of everything, including precious metals. So please be aware of that. It does take a little bit of time for people to stop panicking and then to start to think rationally. But of course the institutions know this. All they have to do is to create a red candle and everybody goes running, a green candle and everybody comes piling in. Please seek to reverse this method of dealing with market fluctuations. I know it's pretty hard to do, but it is really important. If we're going to get a bullish perspective out of gold, we need to bypass the 2647 structural resistance level in order to come up to the 2661. If we get a bearish momentum, we're in all likelihood heading down to the 2625 or potentially below that. And you can get all of these indicators from CTKSmethod.org. It's very good that if you don't buy into narratives such as Uptober or all of that kind of gunk, because it just gets in the road of your profitability. Just know where the structure is and do your cheat sheet first and foremost. And thank you to all the people who've reached out to me on X through direct message and said the cheat sheet, doing it, has just saved them a fortune today. One thing that I also want you to be aware of, even though we can get negative price momentum inside any specific price chart, always be aware of the reversal. That's very important. It's very easy to get stuck in your way and just say, or get in your own way, very easy to do, because we just say, oh, it's going down and down and down, it's never going to come back up. That's not the truth. We know it's coming down and going up and coming down and going up and coming down, and typically reverses around 50% of the potential drop that we've just seen. So please be aware of that. You can always make money in any market, but some days it pays just to sit on the sidelines if you're in a good position to do so and just watch what's happening. Also, it's good to be aware that there's a lot of structural weakness showing inside different markets. For example, the Hang Seng in China just pretty much reduced 50% of its gains. It had an incredible run up because of the stimulus inside China, but it just tanked itself. This is the power of the VIX. The VIX works across all global markets. Please be aware of that. It also works across crypto. It doesn't matter what market you're in. As you can see here, the ASX in Australia is dependent on what happens inside the major indices, and Bitcoin is a very reliable risk on or risk off indicator. And it's good to remember that if you invert the VIX and you pop it on your chart, it can give you a really good directional correlation as to where crypto and the stock market could well be going. And don't forget, the US liquidity is being drained from the market at the current time. And this is in stark contrast to a lot of narratives out there that says US liquidity is going nuts. Currently, it's not. If you want the truth and the facts and the reality of the market, just hit that subscribe button if you're new. And also a very warm welcome if you are, and welcome back, CTKS family. Please let me know in the comments, what are your perspectives on, are we heading for a correction? Do you think the VIX is going to just spike up, or do you think it will spike backwards? And if it inverts, if the VIX starts to come down and back to earth, that will actually drive Bitcoin and the S&P 500 and all of the stocks and all crypto and also commodities upwards? Or do you think the VIX is going to spike up, therefore the inverse VIX is going to predict a downward direction for the major indices, Bitcoin, and of course individual cryptos? Please let me know your thoughts in the comments. I think it's really important to discuss this. And whatever you do, prepare. And that is the secret code word for today. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.